Hello there, I hope that you are doing well. Welcome to this lecture. I'm recording this lecture on the first Christmas day of 2023, so I'm just going to dive straight into it. I want to start off this lecture with a screenshot of a chat that I sent within the Ones That Know Discord community. I wrote in this message on the 18th of December 2023 that I was looking for something like this to close the year on Dixie. One final push lower to reach the weekly BC that I also shared during the GU breakdown video, I believe, and engineer more sell-side liquidity above the 2023 low by going sidewards. If we take a look on the Dixie price action in a bit, we can see that this exact scenario played out. The reason why I wrote the following is because I understand how IPDA is referencing and engineering to all the lows of, for example, a previous year. Look, the market was so close to this objective that we were discussing, and it stopped right above it. It was too obvious that they were going to gravitate towards that sell side liquidity to just push it lower just once more, then engineer a low. This is a short term low until proven otherwise, and then retrace, go sideways during the week of Christmas, and then for the next year, there's a new key low that got engineered in this area, plus the sales liquidity below here. So in terms of the engineering of liquidity, this is how IPDA stops right before key price objectives to trap certain individuals and believing that a long-term low is in, while in reality they're just engineering more sell-side liquidity that can be targeted at a later point in time. So that's why I wrote this, and that's why that was my analysis for the previous week. Here we are on the weekly chart of dollar, and as we can see, we saw a Danko's week again on dollar, and dollar reached our price objective of this price range from this low right here to this high. The price range between those two annotated levels is called a BC. It's a fair value gap. This is an inefficiency that price had to reprice into at a later point in time. If we go into the daily chart, we see the following. We see that this gap was allowed to stay open as outlined. Told you guys why this was a breakaway gap and why we should not anticipate price to retrace into that. Reason being is because this is all one balanced price range. So that means from a hierarchy of institutional order flow perspective, balanced price ranges are on the top. They are the most important when it comes to determining draws on liquidity and measuring order flow. And the moment that a balanced price range gives up the ghost, it's your first sign that price is likely to retrace deeper than what you would like to see for a full continuation move, whether it be bullish or bearish. This is a topic I will discuss more, of course, during 2024. But for now, it's just important. That's the logic that was utilized to call that this gap was allowed to stay open and that price was likely to draw towards this weekly BC right here. As outlined, we are currently in Christmas week, final week of the year, no high impact news drivers. I anticipate the market to just go sideways, as shared during that Discord chat that I put up at the first site. So for me, the year's already done trading wise, review wise as well. The only reason why I'm making this review right now is because I want to touch on a topic in a bit, and secondly, because I wanted to outline the delivery that was anticipated. Look, of course, there will be setups next week. Don't get me wrong. But from a yearly perspective, I believe that reflecting during such periods of slow market environments is the best thing to do. Reason being is because the markets will likely chop around. The delivery will not be as smooth as you're used to, usually. And therefore, it's not worth risking any mental or real capital within such environments, in my opinion. So that's why I'm saying, okay, the year is already over. It's time to spend time with our loved ones, to focus on the important stuff outside of the charts, work on our yearly reflections, and then going into next year, we're feeling all fresh, energized, and ready to crush the year. So now comes the main reason why I wanted to create this lecture. It's because of the following. I know that some of you are completely new to trading. I know that this might be actually the first real education that you have signed up for in the form of a mentorship, in which someone who has more experience than you is teaching you how to get to their level of understanding. And I know that everything that I'm showing within the charts might seem like it's a whole new language. It might be scary to see that type of stuff and to listen to me speak about certain advanced concepts. But look, it's not like I was born with this knowledge. No one that has an advanced level of understanding of basically any skill and has the capabilities to do stuff with that skill was born that way. They had to work hard, they had to spend hours studying these concepts, looking for repeating phenomenon, and then they had to learn how to apply those concepts. But the fact that you are seeing certain phenomena repeat over and over again shows that it's possible for you to study these phenomena, go into old market data, and just get the chart time in. And within 6 to 12 months, your whole life can be different if you put in the required time and effort. And wouldn't it be lovely if you, listening to me speaking right now, could be the person that changes your whole family tree? Wouldn't it be wonderful for you to be able to make an impact in the life of your loved ones and the people around you, the people you care about? That's what this skill can do. If you think about that, if you think about those questions, whilst it's Christmas right now, maybe you're watching this later, doesn't matter. Set a goal for yourself. Set a goal right now for yourself that 1 year from now, you will look back at that goal that you wrote down and you will look back and think to yourself, did I accomplish what I wrote down? And it could be anything. It could be maybe getting to create your own model. It could be getting to an X amount of net worth. It could be getting to an X amount of percentage gain within your trading capital account. It could be anything. The important thing is just to set a goal, to aim for something, to aim to reach something from a year from now, so that you will be able to look back at this specific moment in time and think to yourself, did I slack or did I put in the work? And by asking yourself what it would feel like when you reach that goal, but also what it would feel like if you do not reach that goal, you find a sense of motivation and inspiration that goes beyond what anything else could provide to you. Because trust me, when you start reaching your goals on a consistent basis, week in, week out, month in, month out, year in, year out, you live a life of fulfillment, and there's nothing that can come close to that. And I find it important to share this message, especially with the people that are completely new to trading and everything related to financial markets, just because I know what it feels like when you're looking at these charts and it feels like it's just one new language. One language that is so hard to understand. But look, when you put in the time and effort, when you keep on showing up, when you keep on being consistent with getting in front of the charts at the right times, at the right days, logging old market data in a consistent manner. PS, check out the TOTK dashboard that has been released. If you go to my Twitter, I retweeted a tweet from Jamie in which you can go to our website and you can secure your Notion dashboard. Being organized is the main thing when it comes to development. If you're not organized in collecting your data, in your routine, in creating your model, or anything else that has to do with self development, you're going to slack. Because how else will you measure progress if you do not have any data to look back on? And that's where Notion can be applied, and that's where it can be useful. But back to the topic. Look, this may seem like a completely new language. It may seem like you're trying to learn the most advanced language in the world. And to be fair, it is. Because look, over time, these charts will begin to feel like second nature. You'll be able to look at them and say, oh, I've seen this in the past, so this is what is likely to happen next. When you get to that point, when you get so familiar with how price delivers, and when you know what I am going to say before I actually say it within these reviews, within these lectures, within these analysis, that's when you know that you have leveled up tremendously. Until you are at that point, until you are able to say, okay, this is what Zeussy is likely to say, you need to study more. It's simple as that. You need to study more. But when you get to that point, when you're able to say, okay, he's likely to say this next, because I see, for example, this market structure shift with fair value gap and a retracement in, so now I can anticipate continuation. When you are able to do that right away, you know that you are at a very high level of understanding price delivery. And that should be a goal for you. If you can get to that level by next year, you should be so fucking proud of yourself. And I think, and I am of the opinion, that if you keep on showing up, if you keep on being consistent with watching these reviews, shortly after they have been published, so that means not watching them after weeks or months have passed by. Don't get me wrong, they're still valuable, but it's important that if you're already a member or subscriber now, that you stay on track, that you follow my instructions, that you listen to what I say, and that you shut out the noise. Focus on IBDA, focus on the charts, and the markets will provide. It's simple as that. I'm excited to begin with everything when it comes to the mentorship. On the 8th of January, I will begin with the schedule of 2 daily reviews and 1 week review. And until then, I'm just going to share lectures based on old historical price action. I'm going to share some insights with regards to the model that we're creating, with regards to the foundation or the knowledge foundation, so to say. And we're just going to advance together. I'm teaching you as I would teach you if you would be someone who was in the room with me and that was asking me for a personal guided approach. I could even go as far as saying, as if I'm teaching a loved one, someone I deeply care about. How would I teach that loved one to get to the level of understanding I am at? That's the question I'm asking myself when I'm teaching you. and when I'm thinking about how should I teach you in the most efficient manner possible. And I believe that if you keep on looking at my content, taking proper notes, looking at examples like this, and saying, okay, Zeussy said that this gap was allowed to stay open because of so and so. Okay, let's study that. Let's see if it occurs more often. And from there on, you develop and you grow. That's how you reverse engineer everything that I share. By taking notes on the reasoning behind why certain things were said, and from there on going into all data and looking for yourself. I want to wish you a happy Christmas, a Merry Christmas, and a Happy New Year already. And I hope that you found something insightful from this lecture. Thank you for listening.